Tesla has been the darling love child of YouTube investors for years at this point. Open up YouTube on your app and there was usually a 50% chance you'd see a picture of Meet Kevin with his mouth wide open and some random title explaining how insanely good value Tesla stock was. But to pin this all on Kevin is a little bit unfair. The other finance giants on YouTube like Graham Stephan and Andre Jick were also a little too interested in Tesla, and there are also literally hundreds of smaller channels like Sasha Yanshin and Tom Nash who felt the exact same way about Elon's cars. As Tesla's share price rose, so did its popularity, and it started to garner more and more attention, with new investors coming along to get a piece of the company that they'd been told would change the world. At its peak, it was worth over $1.2 trillion, but today, about a year on from that peak, it's worth only $355 billion, a drop of almost $900 billion or a 70% decline. Many sharks are circling, and the narrative now being pushed across YouTube is that the bubble is over, the euphoria is dying, and Tesla will continue to fall until it's worth only a fraction of what it is even today. Myself, on the other hand, I want to dissect exactly what's changed over the last year that's caused this company's disastrous results, and that's what this video is about. The first thing we have to talk about is, unfortunately, Elon Musk himself. Tesla always had a cult of personality surrounding Elon, and that's one of the reasons it has seen so much success. He was one of the founders of PayPal, a company that revolutionized payments as the internet took off. He founded SpaceX, which beat NASA at their own game, and Starlink, which will bring internet to parts of the world which never before had access. And that's without even mentioning the fact that without Elon, electric vehicles would be nowhere near as prevalent in our world today. He has always been a visionary, and it's that status that has brought so much fanfare from investors. With a track record like his, it would be stupid to bet against Elon, or at least that was always the claim. Unfortunately, with these benefits also come some equal and opposite drawbacks, known as key man risk. Now, usually the stakes are a little bit lower when talking about key man risk, but it's the idea that a business could seriously suffer if one person is unable to work for a period of time, or leaves for a competitor, or God forbid, they die unexpectedly. Tesla, with its reliance on Elon's brand, would suffer atrociously were Elon to die out of the blue, but in this instance, there is a second aspect to that key man risk that Tesla faces that most businesses don't. That Elon should get distracted by another pet project, or maybe he'll say the wrong things online and lose his fans, or maybe he'll just get too political and invoke negative attention from politicians trying to bring him down a peg. You can probably see where I'm going with this, as this has all happened with Elon over the last year, and this is the first fundamental problem that Tesla is facing. It's Elon Musk himself. Now, it's no secret, but Elon has been selling shares over the last year, and at the time of me making this video, he sold almost $40 billion worth. Not a great look from the company's largest shareholder, and someone who claimed that he would be the last money out. Now, why is he selling all these shares? Well, we don't exactly know for sure, but there are a few likely answers. The first is that he needed to sell some shares to pay some taxes he had due in the earlier part of 2021, and that sounds fairly reasonable, as billionaires usually don't have $11 billion just lying around in cash, which is what Elon ended up paying. Another reason he's probably been selling shares was to pay for his initial purchase of Twitter, and then maybe even to fund Twitter going forward, as the company is, to say the least, an absolute total dumpster fire that is going to need capital if Elon wants to turn it around. Again, that's a reasonable excuse to sell out of Tesla, but that doesn't mean the impact to Tesla's share price is any less massive. The final reason Elon may be selling Tesla shares is that the company is just plain and simple overvalued, and Elon knew the company was going to fall in value, so he was trying to sell out while prices were still high. As Elon said back in May of 2022, Tesla's stock price is too high in my opinion, and that was when Tesla was sitting at roughly $45 a share back then, and at its peak it was almost 10 times that. Whatever Elon's motivation for selling, every time he does it, Tesla's share price takes a beating, and his continued shedding of the stock has without a doubt contributed to the company's disastrous 2022 performance. But the key man risk for Tesla doesn't stop there. There are now accusations from Tesla shareholders that Elon is distracted by his Twitter purchase, and as a result, he isn't paying enough attention to Tesla, and that is causing the company to suffer and its share price to fall. Squawk Square is an infamous Tesla fan who used to be borderline in love with Elon, but much like many Tesla investors, he's found the last year very hard to stomach. Elon's Twitter purchase has now cost him and Tesla investors around $500 billion. Imagine buying a social media site for $500 billion and having nothing to show for it. As I said in April, the biggest mistake in Elon's career. Twitter investors that got paid laughing all the way to the bank. Again, this is a hard claim to substantiate, as we can't know what would have happened with Tesla had Elon never bought Twitter for sure, but it is a fact that Elon is spending much of his time working on Twitter, and so it's likely he's also spending less time on Tesla itself. Of course, I haven't even mentioned the fact that Elon is more political than ever, and he spent much of the last few months alienating not only many of his investors, but his customers as well. With tweets talking about how the woke mind virus is either defeated or nothing else matters, or tweeting a poll suggesting terms for negotiations to the end of the Russian invasion of Ukraine. Now, I'm not trying to make a political statement here on whether what Elon has said in those tweets is right or wrong, but it is a fact that it has thoroughly annoyed an awful lot of people, many of whom used to be Tesla customers or even investors. It's not a secret, but those on the left wing of politics have always been more interested in climate change and opposing fossil fuels, and buying electric vehicles has always been dominated by that left for that very reason. Elon's politics are clearly more right-leaning these days, and it almost seems like he's going out of his way to annoy those who used to be his biggest and best customers. As for whether or not this will have a notable impact on Tesla's sales is a tough thing to say, and it will probably take a few years of this before we're able to see a change in demand for Tesla cars, as they're a slow good to move, and the buying process can take years itself. But confidence in the company has been shaken in part by Elon's political moves and perceived toxicity on Twitter, and that has likely been a factor forcing the share price down. Now, really quickly, if you want to stay up to date on investing and finance news, the single best way is by signing up to my email newsletter with the link down below in the description. It's replaced the old series I used to do on this YouTube channel where I cover everything that happened and keep you up to date. It's 100% entirely free, and you can always unsubscribe anytime you want. So sign up below with that link in the description if you want to help me out. Now, Elon's problems for the company are alone a lot to think about, but there's also the state of the electric vehicle market in general, and just the fact that things have changed over recent years, and legacy car makers are starting to pay attention, and actually some of them are doing quite well. Take a look at VW Group and their move to invest more into EVs, and you can see some pretty impressive growth, and that they seem to be catching up with Tesla, with Bloomberg estimating that VW could sell more EVs than Tesla as early as 2024. Now, I personally don't think that's going to happen, as VW's production figures are not scaling fast enough, but Tesla has always been valued as the undisputed king of electric vehicles, and for many years it was, but as other competitors come to market, it appears that Tesla will remain a major player forever, and the days of bankruptcy looming over them are long behind them, but will they be able to justify their previously insane valuation? To be worth more than every other car brand in the world combined, in the long term, they will need to make more money than every other car brand in the world combined, and that seems unlikely when the best case scenario seems to have them capturing maybe 20 or 25% of the car market as it all turns to EVs. A more likely estimation is that they sit at something like 10 to 15%, and with those numbers, the stock was just too expensive. Now, Norway has always been a market that we like to pay attention to because they announce how many EVs, or actually cars in general, are sold by brand and model, and they do this every single quarter, and they also have the highest percentage of EVs to normal cars in the world, so they are the most developed electric vehicle market. And what do the numbers in Norway say? Well, the Tesla Model Y is by far the best-selling car in Norway, but no other Teslas even made the list, with every other car being occupied by legacy manufacturers, and 3 of the top 4 best-selling cars being EVs from BMW or Audi. The evidence simply shows us that the EV market has evolved, and Tesla isn't as dominant as they used to be. Now, the looming giant problem that I have yet to mention has no doubt already caused a few angry comments to arise, and it is, of course, Tesla's China issue, or should I say issues. The first major problem is that Tesla has always been demand limited, and that means that they have more buyers than they can cope with, and so every car that they make is practically instantly sold. Now, this is great news for the most part, but it means production of cars is imperative and far more important than for other car makers. Tesla took a big gamble a few years ago when they went headfirst into China, both on the manufacturing side but also on the selling side. At first, things went very smoothly. The Communist Party, being insanely corrupt, allowed Tesla to ignore many regulations that competitors were forced to follow, and the factory was up and running, creating cars in no time. But then came the CCP's evil zero COVID policy, and factories being shut down became commonplace. If a few COVID cases were to pop up in an area near the Tesla factory, the entire thing gets shut down, and suddenly Tesla is incapable of producing new vehicles at the required rates. Now, some will argue that the CCP have just ended their zero COVID policies, but you'd have to be insanely naive to believe that, because the lockdowns were never actually about COVID, they were about controlling the populace, and within a few months, the CCP will almost definitely once again start locking people down just for different reasons, and the result to Tesla will be the same. Then, of course, we have the issue that Tesla never expected, but they should have, and that's actually selling to China. It's a very nationalist country, and there have been fake news stories spread by Chinese state media surrounding Tesla over recent years that are driving public opinion towards the company and its vehicles into the ground in China. Now, when it comes to Chinese state media, nothing happens by accident. It's all owned and controlled by the government, and the simple fact is that the CCP want their citizens to buy Chinese cars, not American ones. As this moves forward, there isn't really anything Tesla can do about it. We know how insanely powerful the CCP is and how willing they are to destroy companies, fine them billions, or even just make it illegal to make a profit, so Tesla pretty much just have to sit back and take it. But what this does mean is Tesla's dreams of a 1 billion strong domestic market for their cars that they can dominate, well, it's just never going to happen, and Elon's comments regarding the CCP have hardly endeared him to many Americans who are likely to buy his cars or his stock. Unlike with Russia, the opposition to China and the view that they're a hostile foreign state has grown across both sides of the political divide, but Elon finds himself pandering to the CCP in order to try and maintain his business interests in China. He literally suggested that Taiwan becomes a special administrative zone of China, to much praise from the communists, despite the fact that the same fate was forced upon Hong Kong, and that has already led to countless human rights abuses and the death of democracy in the city. On this point, I feel fine taking a political side. Elon sold out to China, and it is not a good look. Now, there is just one final massive problem that Tesla is facing, and this has of course damaged the stock price as well. It's the monetary environment. The Fed has been hiking rates for months now, to Elon's great dismay, and this is impacting every company in the world, evidenced by the market's awful performance throughout 2022. It's getting more expensive to finance a business and finance growth, and that means growth is going to take a back seat, and Tesla isn't immune to this effect. It's also getting incredibly likely that a serious and very severe recession is about to fall upon the entire world, and Tesla sell luxury goods, EVs that no one needs but many people want. And what do we do when we lose our jobs or have to take a pay cut? Well, we reduce our wants. Tesla was overvalued, and now the environment has changed and things are just not the same. The share price is crashing, Elon is distracted, and the company has gone from a bastion of the good humanity can do to the pet project of a man hated by many. Elon's insistence that China will be a key market is only throwing fuel on the fire, and his decision to align himself with a man like Xi Jinping, one of the most vile men alive, is not a good look. If you want to know more about the power dynamics in China and why it all just changed over the last couple of months, then this video right here is perfect for you, and don't forget to sign up for our totally free email newsletter, Stoic Markets, and of course to stay stoic.